The short squeeze has started. I'm going to talk about three stocks. These three stocks can make you a lot of money. So please stay with me through this entire video. I'm going to explain what happens and what we're looking for when we have a short squeeze, which is what we're seeing with these three stocks. Now, I'm also going to explain risk versus reward, because I would never tell anybody to jump into these stocks and just hold with diamond hands, because we're here to make money. We're not here to support whatever stock it is or whatever short play it is. We want to get in, we want to get out, and we want to keep the money on our side. We want to put this money in our pocket. We don't want to give this money to those institutions. All right, so stick with me through the video. If you like my videos and you like what I have to say, or you want me to talk about maybe your stocks, make a comment below. Make sure you subscribe, hit the like button, and we'll go forward. Well, let's get to it. The first stock I'm going to talk about is OTRK. Let me just pull it up. There we go. Now, I pulled up the 3-month chart, but let's first talk about some characteristics of a short squeeze or a short play. First, it has to have low number of shares outstanding. Okay. Now, this stock has a free float of just over 8.7 million shares. The shares outstanding are 18 million. 18.66 million, and the volume just today on Friday is 156% of the shares outstanding, meaning they've already traded 29 million shares. Now, there's only 18 million shares available to the general public, which means one average share has been traded at least 1.5 times on average, meaning I bought it, I sold it, somebody else bought it, somebody else sold it. That's 2 times, okay? It's traded 1.5 times, and we're only at 11 a.m. So at 11 a.m. this morning on Friday, we've got OTRK at $12.30. As you can see, heavy buying here. Now, they started to set up for it yesterday, and people were taking profit because the volume was 1.8 million, when normally volume is 300,000 to 400,000, okay? So the fact that volume was going up, people were saying, oh my God, I got a spike from $8.80 all the way up to $10. They just made 15%. They said to themselves, profit taking, thank you, pay me, put it in my pocket, secure it, move on. Now, what they missed out on is the short squeeze. They missed out on the reason that everybody's buying this stock right now. So let's go to the 5-day chart, and we can see the volume has started picking up here. Now, I don't know this for a fact, but I assume this stock was probably spoken about on Reddit or Wall Street Bets or some other social media site, because stocks that have short squeezes and low floats like this one generally get mentioned on the internet, generally make their rounds from one site to another site, and when enough people are talking about it, it actually happens. People start buying the stock. So we're actually going to go, this is the 5-day. I'm actually going to go to the 1-day, show you guys what we're seeing here. Again, no real action. There was some buying here. I know it shows a red line, which indicates selling, but it wasn't. It was people selling at the bid price. So people were actually lined up to buy. They had their bid orders in place, and then people were selling for the lower price. Understand, they were taking profit. At $11, and the stock's at $12.24 now, at $11, at $1 less, this stock was still up 12%. So we can't fault them. Now, they're here, just like you and I, to make money. If you understand the concept of why we're here and you have that light bulb moment, please hit that like button, hit the subscribe button. Tell me in the comments that you understand. There's no emotion. We're here to make money, put it in our pockets, and be done with it. We don't care. I mean, we care if the stock goes up or down. I won't say we don't care, because obviously we'd like to make the most money possible. So anytime you ride a stock up like this, you're riding it up. It usually has about 3 turns, and I'll show you what I mean. The first turn is here, where people started taking profit. The second turn is here, people started taking profit. The third turn is here, where people start taking profit. So that's my max. That's where I believe the stock will go below. All right, so anytime I'm holding a stock and I see 1, 2, 3, and maybe you think that wasn't 3, maybe this is 3 because the first one didn't count. So you think of the 3 is right here at $13.48. anytime I get higher, so I get the first spike here, if I didn't sell on the first spike and it comes down and I get a second spike even higher, I'm out, because I'm telling myself that it's probably going to go under, where is it? Right here. That it's probably going to go under $13.14 at some point during the day. Now remember, we are here to make money. So if you buy low, sell high, you make the money. You have it on the side here. Now you say, okay, I've got no position in this stock, and I do believe it still has the potential to short squeeze, especially if the markets get stronger later today. So I'll tell you right now, I would be purchasing, if I wasn't doing this video, and I'd probably do it after the video, I'm going to repurchase my same position that I was in this morning, and I'll purchase it right around here at 12.26 to 12.28. I know it's 12.30, so I don't want to pay that. Oh, great, it's 12.25 to 12.28. It's like the computer hears me as I talk about it. So I'm going to be purchasing this stock, and this is only one of 3 short plays that I'm going to talk about today. But this stock I'm going to purchase, and I'm going to look to ride it up right about here, a full dollar. And a full dollar going from 12 to 13 or 11 to 12 would be about 14%. So I'm giving you a strategy on how to return 14% in one day. Now, if you're too late for this short play, understand, I'm going to show you some other ones. But when you're watching it, you'll see 1, 2, 3, and you tell yourself the next spike, I'm out. Okay? So you're out at $13.50 and you buy it back cheaper. You buy it back at $12.30. The point is, you have to know when to exit short squeezes. So let me talk about another short squeeze that I saw here this morning. I have no position in this one. It's RWLK. All right, so here we go. Rewalk. Again, another short squeeze opportunity, and I'm going to tell you why. Because this stock used to be, if you look at the 5-year chart, as high as $75. Now understand, the stock's at $1.69. So 5 years ago, this stock was at $75 and had a value of $7 billion. Now the value of this company is $105 million. The total value of the entire company is $105 million, meaning it has low capitalization, so it's a prime target for a short squeeze. Now we'll talk about the number of shares outstanding. 62 million shares outstanding. So 62 million shares are outstanding. I could buy some, you could buy some. The turnover today is 133%, which means people have traded over the number of outstanding shares. 62 million shares outstanding, 83 million shares are the volume today. So again, I have a share, I trade a share. I bought another share, I trade. No one's holding on to this. Everybody's looking to make profit. So when everybody's looking to make profit on a stock like that, usually it spikes at open and then goes down throughout the day. So we'll see here. You got the spike at open and you see the huge red candlestick of people selling. Why were they selling? Because they were getting $1.94. Understand, we're at $1.70 now. So that's 24 cents. That again is 12%. Understand, when we talk about short plays and you keep hearing me mention 12%, 14%, 16%, those are the times to secure profit. Unless you tell yourself you have strategy and you're going to hold for this stock to go to $5 again. So you say, I'm going to buy at $1.60 like the AMC apes, and you're just going to hold the bags until $5. You know your strategy. You say to yourself, if it takes a year, I'm holding. If it takes 2 years, I'm holding because I'm going to buy in for $1.70 and sell for $5.10. I'm going to return 200%. So if you have a strategy like that, you're going to return 200%, and you want to hold for 3 years, 4 years, 5 years, 200% is still a hell of a return in 5 years. Okay, so we're back to talking about this stock. Let's talk about it on a more short-term basis, because I don't want anybody getting stuck holding the bags. I don't want anybody saying, I was told to buy into this at $1.70. Now I'm holding these heavy bags because the stock is back down to $1.34, because that is the possibility. Understand risk versus reward. So you buy into the stock and it can go as high as $2.20 or so. So if you buy in at $1.70 and you're just swing trading it and you want to get out, let's not even go as high as $2.20. Let's go to $2. That's a nice easy trade. $2. You're in for $1.70. It goes to $2. you make 20%, you're out. You put the money in your pocket, you call it a day, and you look for your next trade. Okay, so the downside on this trade is you get in, and it goes from $1.70 where it is at the spike, and you could see heavy selling. So there were bag holders that were happy to sell at $1.29. There were bag holders that are happy to sell at $1.61, $1.67. So the fact that you're holding and you have the reverse strategy saying short squeeze, yes, there is a potential short squeeze, but understand the risk. So the risk is the stock is going to go back down to $1.30. The reward, if you're correct, is the stock could spike as high as like $2.50. Maybe you get lucky and maybe it spikes up to $4. Okay? Spikes up to $4, you're looking at 100% return. Goes down to $1.30 and you're looking at a loss of about 35%. So you have to understand your risk on one side versus your reward. And if your risk versus reward is acceptable on this, or you have enough money where you could tell yourself, you know what, this stock is going back up. I'm looking at the 5-year chart. I'll take anywhere, even these little bleeps in here, this little bump, 355. This is $6.88 here. So although it doesn't look very good, $6.88 is a lot higher than $1.70. So you might say to yourself, limited downside. Now I'm at $1.67. Is that good entry? And again, I would tell you that I would be interested in playing a short squeeze here. If I could get in, let me pull up the 5-day here, because there's no way I'm buying in anywhere in here. The most I would pay for this stock might be $1.31 to $1.32. So now I've given you 2 short squeeze plays. Let me see if I have one more for you here. And if not, let's see what we got here. Oh, Fat Brands, because that stock has been moving. Let's just bring it up real quick. FATBB. Okay, so we got Fat Brands here. Let's look at the 3-month chart. You're just going to see it spike recently. Again, I'm pretty sure this is the company that's involved with putting big decals of players' faces, Fathead brand, something like that, on their walls. Sporting company, marketing company. With that said, it was as high as $16. So we look 3 months ago, it was $16. Here we go. Oh, I guess it became public. So it became public, went from $10 in August to $16. And since it was $16, and again, it went public at $10. Here we go. It's gone down. So we're at $9. Then we're at $8. Then we're at $7. So in there, somebody is saying they went public at 10. They're a good brand. They're a solid brand. Are they worth 30% less than what they are, monetarily speaking? So people said no. So somebody got the word out and they started buying and buying and buying, and they pushed it up to the $15 range, which is great. I think that's a fair number. If you're in there and you have the idea to purchase this at $7 or $8 and sell at $15 because that's where it peaked out here, that's what the institutions did. That's what the hedge funds did. Now what happened? The retail traders took over and they pushed it even higher on the second day. So they pushed it all the way north of $20. Yes, there it is, $20.65. Now you have the third day that started out as inflow, because people say, psychology of trading, if it's good one day and it's good the second day, I'm going to keep riding this streak until it's no good anymore. So I'll get it on the first day, I'll get it on the second day, I'll even get it on the third day. I bet this company started as inflow today, because you see outflow here. So it was obviously inflow because it's up 25%. So you say to yourself, let's just go and look at the spike. Here we go. Started the day inflow, spiked up, huge outflow because people are taking profit at $25. Now heavy volume, more volume today than the previous days when this got started spiking. So it tells me that this one isn't done yet. Fat Brands is not done yet. If I was going to put a target on it, again, it's a relatively new stock. So I would probably put a target on it. It's $20 right now. I would probably say that it'll pop next week to $25, $28, possibly as high as $30. Now, if it pops to $25 to $30 and I'm invested, which I'm not going to chance my money on this. But if you want to do due diligence and buy this stock up, or you're into this stuff, I would look for the pop to $30. at $30. I would beg you, please, I would plead with you, please take profit. Take profit, call it a day, move on to the next trade. If you like what you hear, please comment below and stick with me. I drop videos every day and they're here to make you money, me money, you to learn, me to teach, and together we're going to take our money back from the institutions.